Most major economies are expected to report growth in economic activity this December, with all three key indexes showing positive results. In addition, Monday could be dubbed China Day on the economic calendar with a full slate of reports. Interestingly, US President-elect Donald Trump has invited Chinese President Xi Jinping to attend his inauguration in Washington. Could this signal a reversal of softening of Trump's previous harsh rhetoric toward Beijing? Only time will tell, especially with the modern months to go before the inauguration. But for now, let's focus on the present, specifically Monday, December 16th. Let's explore what market moves the upcoming economic reports might trigger. You're watching Traders Calendar. Reports on the business activity in Australia suggest that the manufacturing PMI is expected to rise above the 50-point threshold to 50.2, signaling expansion. While the services sector may lag, the composite index is still projected to show a positive result of 50.4 points. This economic expansion is likely to support the Australian dollar, pushing it higher. In Japan, the outlook for the business activity is more optimistic, with all three indicators expected to improve. The manufacturing PMI is forecasted to rise from a 49.0 to 49.5 points. And this upward reversal would be a particularly positive signal given the previous months of a consistent contraction. The yen could strengthen on the back of this strong data, although the key question is how long it can maintain its upside momentum. As I mentioned earlier, several key economic reports are scheduled to be released from China on Monday. Despite China's ongoing efforts to stimulate economic growth, the much anticipated economic miracle seems unlikely at this point. Industrial production is expected to slow to 5% in November, marking a second consecutive decline, and this could signal the beginning of a trend which is likely to wind on the yuan and lead to a drop in oil prices. Moreover, two other key reports to be released simultaneously with the industrial production data are not expected to bring good news. China's retail sales growth is forecast to slow from 4.8% to 4.5% in November. Given that retail sales rose from August to October, this slowdown is likely to be viewed negatively by markets. With the domestic demand being the main engine of China's economy, the country's economic locomotive appears to be struggling and potentially heading towards deflation. The report on China's unemployment rate confirms this trend. The unemployment rate is expected to rise to 5.2% in November, reversing the decline seen in September and October. And this increase will likely put further pressure on the yuan and the oil prices. The German economy is also facing challenges, but the forecast for business activity in December remains optimistic. The services sector is forecasted to expand by almost 2 points, while the manufacturing sector is expected to increase by 0.5 points to 43.5. With such a report, the euro could gain upside momentum. The release of the broader Eurozone business activity reports could contribute to further gains in the euro. The services sector is expected to move into expansion territory around 50.7 points. Manufacturing activity is also forecast to expand, with the index reaching 45.4 points. With the US economy consistently outpacing other countries, business activity in the country is expected to grow. While the services sector PMI might dip by 0.1 points in December, the manufacturing PMI is projected to rise to 50 points, signaling growth. The composite index could even climb to 55 points, further supporting the dollar. Please note that the publication times are set in a GMT plus 3. The next video review of a trader's calendar will be released on a Monday, December 16. We wish you profitable trading and see you soon.